Hey everyone, welcome back to Corporate Decoder, the place where we uncover the juicy secrets hidden in your favorite company's latest filings. And let me tell you, Cycurion Inc. just filed something that reads like a financial thriller with enough twists and turns to keep you on the edge of your seat. This filing isn't just numbers, it is a story of Cycurion Inc., a cybersecurity company navigating a wild ride of ups and downs. We're talking about a company that went from almost losing its spot on the Nasdaq to regaining compliance to a massive reverse stock split, all within a few months. It is a lot to unpack, so buckle up and let's decode this together. And hey, before we dive deep, if you love getting these kinds of unvarnished insights from corporate documents, hit that subscribe button. Also, join our Discord community linked in the description below where we break down these filings and more. First up, an important look at their revenue. For the year ending the 31st of December 2024, their revenues took a dip, dropping by about $1.6 million compared to the previous year. This meant they brought in about $17.8 million for 2024, down from $19.3 million in 2023. Now, the company says this was mainly due to some key federal and state contracts wrapping up, but they also picked up some new business. It is like losing a couple of big clients, but landing some new smaller ones. Not ideal, but they're adapting. Let's talk about their profit picture. In 2024, they actually managed to turn things around and reported a net income of about $1.2 million. That is a huge swing from 2023 when they had a net loss of over $2 million, so things were looking up financially for that year. But then fast forward to the 9 months ending the 30th of September 2025, and guess what? They are back in the red with a net loss of over $18.5 million, while for the same period in 2024 they had a net income of just over $100,000. That is a dramatic flip from profit to a big loss. They blame some of it on merger expenses and delayed contract starts, which is understandable, but still a massive financial hit. Looking at their balance sheet from the 31st of December 2024, we see about $10.3 million in accounts receivable. That is a significant jump from the previous year's $7 million, which could mean they are selling more, but it also means they are waiting for more money to come in. It is a balancing act between growth and collecting payments. Now let's talk about goodwill, a bit of a tricky accounting concept. It is basically the extra value a company pays for an acquisition over its net assets. For Cycurion, their goodwill jumped significantly from about $6.6 million at the end of 2024 to over $20.8 million at the 30th of September 2025. This huge increase is directly tied to their acquisition of SLG Innovation Inc., which they seem to have bought for a premium. This big increase in goodwill means they are betting big on SLG's future potential. Their debt situation is also worth noting. As of the 31st of December 2024, they had about $20.2 million in total liabilities. That looks like a lot, but remember the company has been in flux with acquisitions and business combinations. Their revolving credit line alone was over $3.2 million. By the 30th of September 2025, this total liability figure jumped to over $16.8 million. They picked up a new factoring liability, and their loans payable also saw increases. It shows they are actively using debt to manage their operations and growth. Let's touch on one of their key acquisitions, SLG Innovation Inc. The story here is complex. Initially, they had a deposit and contemplated an acquisition that didn't quite materialize as planned. But then in March 2025, they entered into a management services agreement and a release agreement, essentially gaining control of SLG as a variable interest entity. This means SLG's financials are now rolled into Cycurion's own. The consideration included a hefty $2 million deposit shares and preferred stock. The accounting for this is still being finalized, which means they might adjust things later. Looking at their overall financial health, they had about $25.6 million in total assets at the end of 2024. Fast forward to the 30th of September 2025, and that number jumps to over $32.3 million. This growth in assets is largely driven by that big goodwill figure we just talked about, plus some significant increases in software development costs. It shows they are investing in their future capabilities. Now, looking at their interim financials for the 3 and 9 months ending the 30th of September 2025, revenue took a hit compared to the same periods in 2024. For the 9 months, revenue dropped by about $2.1 million or 15.4%. They attribute this to delayed start dates on new contracts and a strategic focus on more profitable business. It appears they are prioritizing quality over quantity right now, which is a strategic choice, but affects the top line. Their operating expenses have seen some interesting shifts. Selling general and administrative expenses skyrocketed in the first 9 months of 2025 to over $5.2 million compared to just $963,000 in the same period of 2024. They explain this by new hires for growth and increased costs related to being a public company. On top of that, stock compensation expenses shot up dramatically to over $3 million in 2025 from just $10,000 in 2024. This signals significant stock awards to key personnel, likely executives and employees, in effort to align interests and incentivize performance. And then there are the business combination expenses. For the 9 months ending the 30th of September 2025, they recorded a massive $11.2 million in these expenses. This is directly linked to that big Western Acquisition Ventures Corp merger that happened in the first quarter of 2025. These are mostly one-time costs associated with the deal. Interestingly, they also reported a significant gain on debt settlement of over $2 million in the third quarter of 2025. This shows they are actively managing their debt load, possibly renegotiating terms or retiring some of it, which can boost their bottom lines. Let's look at cash flow. The picture here is a bit concerning. For the 9 months ending the 30th of September 2025, the company used $8.8 million in operating activities compared to just $1.2 million in the same period in 2024. This major increase in cash burn is primarily due to those merger expenses we discussed. It means they are spending a lot more cash to keep the lights on and integrate their acquisitions, reflecting their aggressive growth and integration strategy. And here is a little tidbit that pops up on the balance sheet: common stock subject to possible redemption. As of the 31st of December 2024, they had about $1.9 million worth of this. By the 30th of September 2025, this figure is zero. This likely relates to shares that had redemption rights potentially tied to the business combination or IPO process, which have now expired or been resolved. It is basically a financial instrument that changes its classification over time. Now for the big one: earnings per S-share. For the 9 months ending the 30th of September 2025, they reported a loss per S-share of nearly $14.82. This is a huge drop from the same period in 2024 when they had earnings per S-share of $0.22. Even for the 3-month period ending the 30th of September 2025, they saw a loss per S-share of $1.59 compared to earnings of $0.23 in 2024. This clearly shows the financial strain from recent events and investments. Considering all these numbers, Cycurion's financial position appears to be in a significant state of flux. Their assets have grown substantially, mainly due to acquisitions and increased goodwill, which is a sign of aggressive expansion. However, their liabilities have also grown and they are burning through cash at a much faster rate in 2025. The revenue decrease in the latest period is a concern, but is partially explained by strategic shifts. The huge jump in operating expenses, especially from stock compensation and business combination costs, highlights the cost of growth and integration. Looking at the details under commitments and contingencies, they have registration rights for certain shareholders. This means these shareholders can demand that their shares be registered for sale, giving them a path to liquidity. They also have agreements with law firms like Seward & Kissel LLP and Baker & Hostetler LLP, where fees were paid in stock or warrants, which is a common practice to conserve cash. Now about this equity purchase agreement with YieldPoint Nye LLC, it is an equity line of credit, meaning Cycurion can sell stock to YieldPoint under certain conditions. They can sell up to $60 million worth of stock at a discount. This filing is registering their ability to sell up to $7 million of that stock. This is a critical piece of their liquidity strategy, but it also means potential dilution for existing shareholders as more stock is issued, which can push down the stock price. Let's talk about the risks. Cycurion operates in a fiercely competitive cybersecurity market. They're up against giants with way more resources. They acknowledge they need constant innovation to stay relevant, and a key risk is losing clients if they cannot keep up with the rapidly changing threat landscape. That is a constant battle in this industry. They also highlight the risk of cyber attacks themselves targeting them and their operations, which is a bit ironic for a cybersecurity company, but a real concern. Plus, future acquisitions could disrupt their business and harm their financial results if not integrated smoothly. Then there is the stock price volatility and NASDAQ listing issues. They've had multiple warnings about their stock price dipping too low below the dollar mark, putting them at risk of delisting. Although they've recently regained compliance through a reverse stock split, that is a constant threat. This volatility makes it hard for investors to get a clear picture of the company's true value and frankly makes investing quite risky. Looking at management, they have a solid team with experienced leaders like L. Kevin Kelly, their CEO, and Alvin McCoy III, their CFO. However, some of them have limited experience managing a public company, which is a risk factor as they navigate the complexities of SEC regulations and investor relations. And here is a crucial point that echoes throughout the report: the going concern warning. They've had significant operating losses and a large accumulated deficit. While they had a net profit in 2024, it was wiped out by losses in 2025. This means there is substantial doubt about their ability to keep operating without more funding. They are actively seeking more debt or equity financing, and without it, they might have to scale back or even cease operations. This is a major red flag for any potential investor. So what is the story here? Cycurion is in a high growth phase marked by aggressive acquisitions and a complex business combination. They've made some strategic moves like acquiring SLG, which has added significant goodwill and expanded their software capabilities. Financially, it is a mixed bag. While they've shown periods of profitability, the recent 9 months paint a concerning picture, with significant losses and large increases in operating expenses. The equity line of credit provides a potential liquidity lifeline, but also means dilution. The constant threat of NASDAQ delisting and the ongoing going concern warning highlight the significant risks involved. In my opinion, Cycurion is a company with ambitious growth plans in a critical sector, cybersecurity. However, they are facing considerable financial headwinds and operational challenges. The recent merger and acquisition activities have certainly boosted their asset base and market presence, but at a significant cost. Their ability to manage their debt, effectively innovate continuously, and most importantly, generate consistent positive cash flow will be absolutely crucial for their survival and future success. It is a high risk, high reward scenario for sure. Alright, that is our deep dive into Cycurion Inc.'s latest filing. What is your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe to Corporate Decoder for more unvarnished corporate insights. And don't forget to check out our Discord server linked in the description to join the conversation. Thanks for watching. See you next time.